Brent crude fell more than 5% on Monday to $97.94 a barrel, the first time it has traded below $100 in weeks. West Texas Intermediate dropped to around 92. The trigger was a single statement from Donald Trump, who told reporters that a nuclear deal with Iran was, in his words, largely negotiated. No document was signed, no sanctions were lifted. The Strait of Hormuz, which has been blockaded since February, remained closed. Markets moved anyway, because they were pricing in what comes next, not what exists today. That distinction matters more than it sounds. The Strait of Hormuz carries approximately 1/5 of all global oil and liquefied natural gas shipments. Since the blockade began, shipping firms and energy traders have estimated that roughly 100 million barrels of oil equivalent cargo has been stranded or rerouted at significant cost. Sparta Commodities put that figure at 100 million barrels. Even under the most optimistic scenario, analysts estimate a full reopening of the strait would take 3 to 6 months after a deal is signed and certified, not 3 to 6 months from today, but from a moment that has not yet arrived. Iran's state-aligned Tasnim news agency added a further qualifier on Monday. It reported that the deal could still collapse and that the United States blockade would remain in place until any agreement was signed and independently verified. Trump's own framing shifted within the same press appearance. He told reporters not to rush. The market, for its part, rushed. The Australian Securities Exchange closed up 0.54% at 8,703.8. Mining stocks and the big banks led the gains. Japan's Nikkei crossed 65,000 for the first time in its history, a record that reflects the same read on lower energy costs and the possibility of Federal Reserve rate relief. Trump's chief economic advisor, Kevin Hassett, said energy prices would plummet once a deal was signed, creating what he described as significant room for the Fed to cut. That transmission, cheaper oil, lower inflation, rate cuts, risk on, is the chain the equity market is pricing. Gold held near $4,550 an ounce. Northern Star Resources gained 5%. Evolution Mining gained 4%. Haranga Resources jumped 32% after announcing a maiden resource of 402,000 ounces at 5.1 grams per ton at its Lincoln project. Charter Hall gained 6% after a third earnings upgrade this financial year, with record inflows of $6.5 billion, taking its funds under management close to $75 billion. The gold price is the part that does not fit cleanly into the relief narrative. When markets are genuinely de-risking, when geopolitical tension recedes and rate cuts become probable, gold tends to give ground. It did not give ground on Monday. It held. That tells you that at least one large pool of capital is not yet convinced the Hormuz situation resolves cleanly and is keeping its hedge in place while also buying equities. Both things are happening simultaneously, which is not unusual in these conditions, but is worth noting as a signal of how much of Monday's equity move is belief versus positioning. Australia's own calendar adds pressure on top of the global signal. The April monthly Consumer Price Index print is due Wednesday. The market consensus has headline inflation easing to 4.4% from 4.6%, with trimmed mean momentum at 0.4% month-on-month. The Reserve Bank of Australia's June rate decision remains in play. If trimmed mean comes in hotter than expected, the probability of a hike to 4.6% rises, and the rate cut story that equity markets are currently borrowing from the Fed becomes harder to sustain locally. The United States Core Personal Consumption Expenditures Index is due Thursday. That number feeds directly into Fed expectations, which in turn feed into the Australian dollar, which affects the price Australian consumers and businesses pay for every import not denominated in local currency. A weaker oil price helps at the pump and in freight costs, but it only translates into household relief at the speed of the next quarterly power bill, not the next weekly shop. The 100 million barrels are still sitting where they were on Sunday. The market has priced in the call. The cargo has not moved. Historically, oil markets that have rallies hard on ceasefire talk, and the 2019 Saudi Aramco drone attack episode is the closest precedent, mean reverts sharply when the triggering event either confirms or collapses, because the fear premium exits the same way it entered, on words, not on supply. The verification point this week is Wednesday's Australian CPI trimmed mean. If it prints at 0.4% or above, the domestic leg of the rate cut argument breaks even before the Hormuz question is answered. If Iran's Tasnim news agency updates its position on the draft agreement before then, the global leg breaks first. Gold holding above 4,500 US dollars after a signed deal would be the signal that the market still does not believe the timeline and that the structural discount on energy supplies has not yet cleared. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.